Gary Glover's presentation at the ATAA in Adelaide last week. It's a compilation of super performer traders. Gary's looked at some of these traders and the best traders over the last few decades to see what the common themes are behind their trading, their approaches and their analysis. He's broken it down and given us tons of examples to walk through and for us to really understand what makes these best traders. Hi Gary, how are you?
I'm good, Chris.
Thanks for making the time to present this on a recording so that we can review it time and time again and share it with everybody who's watching on Final Market Points. So thank you for doing that. Obviously, starting off with the general advice disclaimer. So I'll let you have that on screen. Is there anything you need to talk about there, or is the word?
No, look, there's not too much. I think most of it's examples that have already occurred here, I guess, or things that have happened there. But yeah, if there's any, yeah, I mean, like we don't obviously know everyone's personal circumstances there. It's just general in nature. Yeah, not to be relied on for, I guess, for trading purposes. Yeah, do your own homework, research. But yeah, this is just the view of the author here.
Right. Well, you've got a nice presentation for us in the agenda. How do you break those points down?
Yeah. So really, key thing is like obviously Adelaide there was just telling you a little bit about stock background, but also looking at the super performers. So what do we mean by super performers is basically looking at sort of equity traders who've got a triple digit return, Chris. So not just a one-off, but actually, do it more than one occasion there and some, just be able to replicate those triple digit returns there over a longer period as well. Just, I guess some of the commonality is around sort of trading relative strength and just what we sort of mean by that. Some examples of relative strength. And we looked at sort of the importance of sort of sector strength. It's sort of something we cover a little bit on 30-30. Often reference some of sort of Stan Weinstein sort of comments there. But it is that the importance of sort of when you see a sector sort of light up, and then obviously at the conference there we had some conclusions and questions, so probably won't have too many of those today. But we'll move forward there. So I just covered myself there. I've been trading for quite a period of time, but obviously a bit of a broker, long period of time. The reality is probably around 3 or 4 years ago, Chris, I just sort of changed my trading sort of style. I'd sort of been a technical trader for a long time, tried a few other methods over the years. But when sort of COVID broke there, it's sort of a bit of a, for me, it was a bit of a change there. I sort of went from working in the city pretty much all my life to sort of being a little bit more remote there. And, some of that came with some lifestyle changes, but also just sort of thinking about my trading in general. I really wanted to get back to a process-driven trading where I can sort of just, in the past there, I had a really nice system there years ago where I had like 10 Bukowski chart patterns, and I just traded those patterns only. And I traded them over 3 years. I think I sort of, my returns were, I think, around 21 to 23% with this system that I ran, 10 different setups, and I had a certain formula and risk management that I used there, but it was pretty consistent over time there. For some reason, I went away from that. Obviously, wasn't happy with doubling my money every 4 years. Went looking for more gains there, and probably went away from making money really, and a bit more lumpy, a bit more risky, and but yeah, as a result, I'm a bit of a sort of hit in the market, and a bit of a lesson. I decided to go back to my roots a little bit there and kind of investigate that. But at the time, I was thinking, okay, well, that's sort of something my old master said to me, years ago. Sort of, be looking to sort of, try and be the best at something there. Then just find out who the best is now, see what they do, and see whether you can start replicating some of that process. So I know that I started to look around at, who were the best traders around at the time there. There's plenty of different books, plenty of videos out there, plenty of guys. I mean, look, some of it's, if you're following guys on Twitter, half of it's nonsense. But, so you really want to be sort of doing homework and see who's any good there. But there is something in the States called the US investing championships. And that's basically, they really do have to, they're audited every year. All the trades go through, and it's month by month, sort of see how they're going there. So that's sort of definitely one of the better outcomes you can see. And then just looking for guys that are transparent and that are obviously well known as well. I do like this phrase there that, if you are looking for super performance, applying conventional wisdom produces conventional returns, not super performance. So, if you want to be exceptional, you've got to be a little bit unconventional. And that's the thing that definitely is consistent with all these sort of triple digit traders there. It's definitely go against a lot of the conventional strategies that that we're sort of taught and sort of pushed down. I guess sort of covered there. So, but looking at looking at the US investing championships there, you had guys in there like Paul Tudor Jones. You had Mark Strome and David Ryan Minervini. There was Baker, who was one of the turtles. Edward Thorpe, who's written a few well-known books around mathematics. Marty Schwartz was even Robert Prechter as well. Tom Basso, Mr. Serenity. So just a lot of people who traded some pretty decent returns in those competitions. That there's some guys who won it more than one time, or we're in the running year after year as well. So Minervini was a 2-time winner. Averaged over 220% over like a 5-year period. So he was actually in Market Wizards. Jack Schwager audited 5-year returns. That's not just a one-off there. These are guys that are making consistently triple-digit returns. David Ryan won it 3 years in a row. 2 years over 100. I couldn't find the third-year return. I've just been looked everywhere for it, but yes, supposedly over 100% every one of those years. Interesting enough, his son, Sean Ryan, was able to get 128% return. So obviously, these can be taught. That's the most important thing here. These methods can be taught there. And if you follow the US Investing Championships in recent years, a lot of Minervini students, people who've gone through his courses, are actually are in the top performance there. Like I think the first year that I was looking there, around about 2021, I think it was either 4 or 5 out of the top 10 were his students all gone through his courses and stuff there. So it just sort of shows you that these things can be replicated there. The other guys I look at there, obviously Dan Zanger, which is Chartpatterns.com there. He holds a record for performance in a pretty short period of time there. And he's got his chart pattern sort of website there, and he does run a newsletter business as well. So anyone follow his work, you sort of know that he's consistently made some pretty big gains here. Kristian Quallamaggie is sort of the Swedish guy. You can pretty much, if you have a Twitch set up there, you can watch him trade almost every day, Chris. So a pretty colourful character, but obviously very successful there. He trades a little differently from others. He's quite an aggressive sort of trader there. Probably takes more losses than any most other traders I know, but when he wins pretty big. And O'Neill is obviously the founder of IBD. He wrote basically the Bible for momentum stocks, how to trade stocks, and developed that can some system as well. And pretty much his trading record there, he was in the early days he had some of the best portfolio performances for a portfolio manager, and he was able to actually leverage that into funding his own firm there. So he had years of actually outperforming most of the market there as well. So there's sort of some other guys that I sort of found he was sort of pretty strong records and pretty consistent gains there, but just years of sort of positive returns there. O'Neill's probably the grandfather. He passed away actually in the last 12 months. But really, he really obviously mixed the fundamental and technical, but he never really didn't take any trades there unless the technicals were all setting up there. So looking for sort of definitely some of those sort of strong earnings companies, but really, relative strength was basically his most important principle, and he often traded new highs and like cup and handles, so basically breaking through the highs as well. So he would often be buying those stocks there. The one thing about O'Neill was he was always buying the strongest names coming out of every bear market. That was his thing there, was sort of identifying the strongest companies out of each bear. So he just knew which ones had held up the best and trading those. So those ones invariably had the strongest gains there. Dan Zanger, obviously, is Sharpad.com there. He had one of the biggest sort of gains there over that 18-month period there in sort of tech boom. But he often trades, he focuses on some of the newer names, some of the newer companies that have only been listed for a few years. But the phrase there is underknown, under-owned, widely used sort of products. So pretty interesting there. So he trades new highs, up and handles. He recently sort of has transitioned to a bit more some bull flags and ascending triangles, but again, still looking for those stronger names and pretty concentrated. Dan Zanger doesn't have a portfolio of 10 or 20 names there. It's, it's usually in a small number of names, pretty concentrated on the strongest names as well. Quallamaggie, so he's a little different from a lot of others there. In the States, there's a thing called Market Smith, which is now called Market Pulse there, but that sort of does sort of charting sort of fundamental sort of software. But essentially, he looks at relative strength is his number one, and he only trades stocks that are sort of like the top 2% by relative strength. So he doesn't look, if it's 97, 96 out of 100, he doesn't trade them. He only trades 98, 99%. So looking at the strongest names there, stocks that have really taken up, had that aggressive move, had the little pause, and then looking for it to get on board there. He's probably got one of the lowest win rates. I think he's, some years can be between 27, 30% win rate. But so although he takes a lot of losers there, he loses very small. When he wins, he wins really big there. And he's on those bigger names too. He can get the 100, 200, 3% moves there. So, he uses moving averages to sort of get himself out of things as well. So, David Wright, obviously, he's sort of definitely a bit more of a calmer sort of trader there. But again, he's concentrated there. Often sort of starts with like a 10% position size, can move up to, I think generally moves up to around 20%. I think Minervini goes to 25. He did go to 40% in one of the winning years because I've got to push the boundaries a little bit to win those comps. But generally probably around 20% position size there. And again, he uses relative strength as one of the main things there. He does trade a few cup and handles, VCPs, which is sort of Minervini's quantum phrase, I guess you might say. He looks at new highs, and then David Wright, we've often spoke about, he looks at that really tight price action of the high. So basically, market goes to the run, has a pullback, goes back, retests the high, ingest nice and tight there. I think something like, A2 looked at something similar. Even something like Nuix has done something, a little ABC underneath the highs recently, and that really tight price action, low volume under the high, and then explode there. So that's his sort of signature move as well. So they're all looking at some of those sort of stronger patterns there. And Minervini, he's probably in my opinion, he's probably one of the probably the GOAT, just because he's sort of, with those competitions there, you can enter sort of with low balances there, have some pretty high returns there, but he's entered the 250K and the $1 million money manager category. So to get, I think he had like a 334% gain in the $1 million category, which is just obscene returns there. So, but also that, the 5 years, 220% audited by Jack Schwager and the Market Wizards as well, just tells you that his system, he's disciplined, got a process there. But thing about Minervini there, he's got a similar system to O'Neill called the SEPA. But the technicals is a big thing there, and he just trades to one pattern only, VCP. And that's the thing too with most of these guys there, they don't trade hundreds of patterns there. Minervini trades a one pattern of VCP. I think David Ryan really, looks at that relative strength, maybe that tight ingestion under the high. That's his sort of signature move. Quallamaggie trades the top 2%. O'Neill's really the cup and handle, sort of breaking the new highs. I think Dan Zanger sort of got his sort of little niche as well there. But they're all sort of very focused. Don't have style drift. Very narrow net focus in what they're trading there. So
it's fair to say they're specialists in their area of expertise.
Yeah, that's right. So sort of, So if you look through, when I look through all those sort of guys in their records, there's plenty of videos, plenty of presentations that they've done personally. There's lots of guys who've look at what they've done and their trading tactics. Even guys have gone through all their trades for those sort of competitions. More, there's plenty of, you can go out and analyze these best traders there. That it's all available to them. But one thing I sort of found there was a few things that were definitely commonality with all those traders there. The first thing was sort of was concentration there. So, we're sort of taught, to diversify. That's one thing you get taught as trading is to make sure you diversify, don't have all your risk in one area there. But all the best traders they're very concentrated. They can be up to sort of anything sort of from 15 to 25% of their holdings in one stock there. But it's also, they don't just buy that outright. They usually sort of buy and sort of scale in and build a position, so to keep their risk sort of tight, but they keep it manageable, they keep it focused. And I guess, if you're just having a small amount of names there, it kind of does keep you patient as well, keeps you constant, focused on those names. And there's some integrity in just looking after a small amount of names. You just, because sometimes you have too many positions, you can't manage it. The field positions there, you can really watch them pretty closely, get more intuitive with them. So you really just focus on the best names. That's the reality for most of these guys here, that they focus on the strongest names in the market there. They also turn over in their portfolio quite a lot. So they now down some profits kind of early. So they get like an explosive move in the first 3 to 5 days. They'll often trade like a quarter or half the position. So they'll scale in and they'll scale out as well. So and by taking some of those partial profits and then moving the rest to break even, it takes the sort of the heat out of the trade, and they can just sort of sit back and enjoy the ride. Because the whole idea is to pick right and sit tight, but sitting's pretty hard. You go up and down, your profits sort of, swing back and forth there. So one thing I sort of found with all these traders, Chris, is they tended to take some profits there pretty quickly in the first 3 to 5 days, just because they did scale up to a pretty decent sort of size position. And then they got a big move. They took a little bit off, so they banked something. That sort of funds there the next trade and stuff there. Also, if you bank a little bit of profit, move yourself to sort of break even, then the risk is sort of taken out of the trade, and you can just kind of let it breathe and run. And it makes the stress off as well. That was definitely sort of something which was definitely throughout all the traders there. And also timing in trades as well. So using time as money, so you've got to use your charts. Got to identify those sort of strong technical patterns, so whether it's a VCP, up and handle, or whatever it is there. But they also have sit out power as well. And I think the phrase there that Minervini often uses is be in the market as little as possible. And that goes against a lot of the other, not always be in the long term, invested, fully invested. Yeah, so it goes against a lot of those principles as well. So these guys are sort of almost, can be a little bit like assassins there, sort of, they wait, and then when it sets up, they jump in there. You'll see that a lot of these guys, they won't be, like when the 50-day moving average is broken, most of them are out. That's usually a negative sign, and they'll exit their positions there. And if I know O'Neill, if we saw the index broke below the 50-day moving average, that would be a pretty negative, and that would be, I'd have to go at least 50% cash or something like that. So, seeing those signs of weakness there, cause some action there. With O'Neill too, like getting a follow-through day, which is after you've found a low there, that sort of big day up, big volume there, you'd always be instructing his portfolio managers, what do you buy today? You have, follow-through day coming out of a low there, you have to be buying sort of something, like at least putting forward of your money out to work there. So looking at the stronger names up that direction there. So there's certain philosophies, certain things they sort of follow in that. They manage the risk-reward relationships, so just need to understand the maths around your trading, around your edge. So your win-loss running, so if you're going to build in some failure. So whether you've got a 2-for-1, like I think Paul Tudor Jones had a 5-for-1 risk-reward. I personally need a 3-for-1 risk-reward, but it obviously varies on your sort of your win rate, lots of ratings on that. So, but just understanding your I guess how it works for you as well. But just know your exit point, know where your sort of stops are there. there's a mix between people, whether they had the stops in, Chris, or not. Some of them had them in. Others just basically, as soon as it goes against them, they just know how to chop it. So a bit of a mix there. But yeah, some of these traders didn't even take loan. I know, so like Quallamaggie there, he wouldn't take a loss home. So he bought something that moved against him, he could be straight out. Just he would not be taking any position home with a loss on it. It'd have to move in his favour for him to take it home. So yeah, all traded directionally. So we'll look at multiple time frames there. Never average down. Only by the direction of the trend. They all work on the premise that it's not. We're all taught to buy low and sell high. All these guys here are buying high and selling higher. That's a real shift in philosophy as well. It's sort of one that so you need to sort of get your head around there. Look at that. A good example is, Chris, I've mentioned this a few times on the trading show as well. On the probably on Tuesday and Friday, is that if you looked at the new highs and new lows list each day, just do that for a month, and you'll basically be surprised that that probably 60 to 70% of the names on the new high list, they're there the next day, the next day, the next day, the next day, and same on the lows. The new lows, 60, 70% of the change. So they just keep trending up, keep trending down. These trends, they last a lot longer than everyone thinks. The ones going down last a lot longer than everyone thinks as well. And yet we're trying to be picking lows all the time, trying to buy low, because it's almost in the human psyche to try and buy low and nail the low exactly. Why are we trying to nail the low exactly? It doesn't make any sense, not really, if you think about it logically. But the humans sort of want to do that. So got to get away from that. Really, just got to be trying to trade with the trend. Most of these guys are buying new highs, buying a break of some high as well. So it's a minor high, but pretty much they're all, I don't think any of them are trading below the 50-day moving average. Pretty much they're all buying sort of above the 50-day moving average. So buying that strength. They do tend to build on success there. So sort of not on a, it's but they're letting those sort of small wins sort of finance the larger risk. So obviously, if you sort of scale in a position, it starts to move in your favour, add more position on, but move your stop up. So you move your original stop up, so basically less, get less risk on the board there. Add your position there with a bit more risk. As it moves up, you're adding, you're basically moving your risk up. So you're funding the next sort of stages there. So they're really building on their success, never averaging down. And they know when they're trading the best and the market's hot and it's working, that's when risk comes on. And then if the market's not working, then they're not sort of they're not really adding those positions, not betting big. And that's the thing about sort of scaling up as well, Chris, as well, because you're only going to scale up if you move in a profit. So if you don't move in a profit, it doesn't move the right direction. You should never sort of scale up in size there. So you shouldn't be putting bigger bets on it until you start winning. So that's the key. That building on success is about building on the wins, not so that really should only have you sort of betting when the market's good. Protect the break-even point as soon as possible. So you should never let a good size gain turn into a loss. That's a bit of a I think that's pretty much every book probably talks about that. Backstopping a profit there. So just making sure that if you get a bit of a gain there. And generally, one of the things too, if you're risking, say, 1 unit risk, if you get say you're risking $1 to make $3, as soon as you've got $1 gain, that 1 unit of risk, that's when your sort of stop should probably get up to break even or pretty close there. So once you move a certain element of risk, that the stop should sort of be moving up there. And your key there is obviously always looking to sort of have a stop in place to cut your loss. The next move is to basically protect your break even, and then once you're starting to make profit, you should be protecting that profit as well. Sort of kind of trailing it there. So all these traders there had a really low average stop percentage. So basically, I think Minervini might be around 3%. I think Quallamaggie might be like 1 or 2% there. It's really, really tight. So their losses are pretty small. All selling into strength. So basically, sort of getting out. Look, there's almost a tendency there to sort of get out before the top, or don't get out before it's too late. Because obviously these guys probably going to be training a bit bigger, so they need to be sort of market needs to be hot, needs to be plenty of momentum, plenty of flow there. So you're better off sort of selling a little bit in that strength there when it's hot. And then oftentimes they'll use most of these guys will normally use they'll might say trade a quarter or half into that strength. Then they might trail the other half using the 10 or 20 day moving average. So just keep following that. If it's a really, Quallamaggie talks like really aggressive move, he'll use the 10 day moving average, but it's more of a mild sort of mover. They'll use the 20 day, and then it keeps going up. They'll just keep riding it higher, and eventually it'll break one of those moving averages there. That's how they'll get out of the rest a lot of the time there. So just keep them in the trade a little bit longer, and I guess the other one there is conducting post analysis regularly. So what do I mean by this? And this is what I sort of say to a lot of traders there is that your results don't really lie, and they should show some sort of commonalities in what you're doing, and you should be able to sort of work out what your weaknesses are, what you need to improve on. So really, if you do a post analysis every month of your trading, and then go through maybe 6 months or every 12 months, have a really good look at it, you'll find out what you're doing wrong. So whether you're trading too much, whether you're not scaling up fast enough, whether you're helping out, not sitting tight long enough, so there'll be certain things there'll be certain commonalities that will be holding you back. And we'll be able to identify that. So all the best traders, they're doing that over and over again. Even Minervini's been trading for 20 years, is still doing post analysis, working out, presenting what's sort of, is there sort of a certain pattern that he's sort of moving towards, as well. So the last thing there is obviously avoiding style drift. This is a big thing here, is that all these guys, they become so specialized that one thing. Mark's the BCP. I mean, Quallamaggie's 98, 99%. David Ryan's got his really tight ingestion there. O'Neill's sort of cup and handle, sort of new highs. Dan Zanger's got, used to be that sort of cup and handle, but then he's looking for that, usually looking for a bit of a break on the volume there. So Dan Zanger's thing. I know he's got a few singles there, but really sort of he's trading the strongest name. He's looking for that heavyweight break all the time there for those. So those are the sort of key things there.
When you're mentioning all those key aspects that all of these traders have, it seems like there's this underlying theme behind it, which is relative strength. So what does that mean to you, and how does that crop up all the time?
Yeah, I mean, it's just, look, I get the key things there is just to look for those stronger names. That's obvious there as well. We see that. We're doing this for 3 years now, looking at the stronger names there. It's just keep running, Chris. They keep going, and they just remain pretty robust there throughout the period. So those stronger names just sort of keep running, keep running big there. So the biggest moves will just come from those companies that do have obviously some earnings momentum. The sector's obviously often running hot as well. Then really the concentration there, the style drift. The best traders don't trade 10 patterns. They only trade maybe, one or two. So really, really, really narrow, no style drift there. So real focus there. It's a bit like that, you talk about that sort of Steve Jobs sort of comment there around, focus there. And, he starts saying, I don't, I am focused, I do this, so you do that because you don't like it, So if something comes up and you think that's going to be it's like a trader here, if a trade comes up and you think, oh man, this is going to be that's a lay down misère. Everything's telling me this trade is going to make money regardless, but you don't take it, even though everybody in your body's saying you should take it, because it doesn't meet your guidelines, doesn't meet your rules.
It's not the one thing you do; it's the thousand things that you say no to.
Yeah, but most of us do. So this is let's say there's 3 types of traders, Chris. There's those with no rules. There's some with rules but occasionally break them, and then there's the third group that follow the rules always and improve on them and fine tune them and never break them. So we've got to get to the third. That's where the that's where the big gainers are. They don't break their rules.
I thought you were going to say the third group stick to their rules, and they're the ones that make money.
Exactly right. Yeah, they're the ones that make the big gains there. So yeah.
Progressing on with your slides. Yeah. So relative strength, I think, is the next one.
Yeah. So to sort of end by relative strength there. So we're talking about basically what stocks are performing well as all the other stocks versus sectors, and just the overall market there. So really, it's not like the RSI line in terms of a technical indicator. It's actually how strong that stock is compared with the rest of the market there. Unfortunately, sort of like in the US there, they have Market Pulse, or Market Smith there, which sort of does have a ranking there. There's a few things on Trader View there, got a few formulas there where you can get some of that on there. Or you just be really looking at what stocks are the strongest for, say, the month, the quarter, or the, or 6 months there, things like that. But I know sort of Stan Weinstein there sort of talks about, two equally bullish charts will perform differently if one's from a bullish sector while the other one's from a bearish sector there. They can be like some of the bullish sectors can move like 50 to 75%, whereas, the bearish group might only move 5 or 10%. So it is important as to what sectors you're looking at, how strong your sort of your stock is as well. So just sort of so if we look at the overall market there, obviously we had the October 22 was the low. We had a pretty deep pullback into December 22, another pullback into March 23, and another sort of pullback into October 23. So they're sort of when the market was at the weakest and the low points there. So we look at what sort of those sort of timings there when the market's kind of weak. We need to be looking at who's looking the strongest and who's coming out of those lows the strongest. Those are the names you want to be trading there. And that's what sort of history tells us there. So we did cover in the video there, well, maybe 2 or 3 months ago, Chris. I think it was what I've told my 20-year-old self on the 30-30 list. So you can go back and watch that video there. But essentially what we sort of showed here is coming out of that October low, like the video went from 110 up to 190. So that stock there was showing relative strength coming out of that low. And then when the market pulled back, I think something like 80, 90%. So basically almost came back and retested the low. If you look at that, see how deep that low was? Came back and pretty much retested it. This stock here has probably only come back half the range. So again, show relative strength going out of the low. When it's pulled back, it's only pulled back half the range, whereas with most of the market came back and retested the low. Some stocks are actually making new lows. So again, it was showing relative strength there. And within a couple of weeks, and this is one thing I sort of noticed quite a bit about when I read sort of a lot of the books as well, Chris, is that usually within 2 weeks of those sort of lows there, pivot lows, obviously that December low, within 2 weeks, the video was at a new high. And so often these strongest names, they often have gone to a new high within 2 weeks, the low there. So that's almost like a really strong sign there. If the stock's held up really well in a bearish phase, and then when the market finally bounces out of the low and it goes to a new high within a couple of weeks, that's a really strong sign that that's one of the leading sort of themes, leading stocks there. So yeah, that's what broke 190 there in January. And I think, that sort of, really sort of powered through those levels and kept going. And even sort of like later on, so basically going through to, we know in October 23, we had another pretty deep pullback then as well in the market. We see here in the video, this got up to around 500 there. The whole thing just tightened up. So really kept a really narrow range. While the rest of the market had a pretty decent pullback, this was holding up really well under that high there. So again, like maybe that sort of David Ryan there, sort of staying pretty tight. There was a little bit of an ABC come back, a little pulse break, and then a sharp reversal. And then the whole thing's come back up to the high. So again, the market said a new come back to retest the lows here. This thing here, within a couple of weeks, it's gone back to retest the high. So within 2 weeks, it's at the high there, and the whole thing just sits there and congests under the high. So really tightens up under that high there. And that's what we're looking for, those strongest names to sit under the high and then congest through there. I think, you want to see something on the Aussie market there, I think Nuix, NXL, just done something very similar. Had a bit of a pullback there, retested the high. Nice little tight pullback under the little ABC under the high low volume, and then push through right there, a little bit of a cup and handle as well. You see those moves there. I mean, geez, this is sort of, you would have thought, people would have thought, oh, when they bought this breaking out of 180 at the time, it was in the high of the range there. So obviously, if you go back and think, I was probably the highest point of the range there. You're buying the high of the year. This is what people don't uncomfortable with versus buying year highs. So, but coming out of a bearish phase, market's weak. The stock's really exploding out of the low. It's telling us, it's basically showing relative strength versus the rest of the market there, and it's gone on. Same through this other period as well. So that's NVIDIA there. It's a really good lesson to actually sort of understand there. But you look at the ASX 200 there. So we had similar sort of lows there in October 22 and December 22, and a pretty deep pullback in March. And we came back slightly further into November rather than October there. Just came back a little bit further there. But if you look at what stocks were showing relative strength in October 22 there, and we talk about this all the time actually, we were looking at 360 at the time there. So while the rest of the market was making year lows in October, this was making a high low, and the whole thing had sort of tightened up in this little band here. Like a little bit of an ABC, a little bit of a false break in here. So we've got a false break coming out of relative strength there, coming out of bear market low in October there, and this is really showing strength there. So it's rallied another 33% up into the high. That's just buying the B wave too. That's not even buying the low. That's waiting for a little, waiting for the first sort of swing high to be broken there. And we saw this tighten up again here, so into March, another little BCP, and the whole thing kicked on and broke out of that range again as well. So showed some relative strength there, sort of twice there. The whole thing sort of tightened up there, which is what we'd like to see. CUV was sort of similar, so one that we traded October 22 as well. Again, we've sort of, while the rest of the market's gone down into October, this is starting to build here. It's making higher low. It's already had a pretty good run, but showed another high low October. So in October there, this is telling us the stock showing relative strength. I think even just coming from the B wave there, I think it was like a 47% rally within a few months. A pretty powerful move there. So it's important there. Sometimes these stocks that show relative strength, sometimes they keep going. I think in the case of 360 there, I think it rallied like 85%, all the way up into 948. Went through a bit of a corrective process. Once we've sort of broken maybe like a 10 or 20-day moving average there, we probably want to be out of there. And then, waiting for that congestion to go through, and then maybe even for a B wave break there. Again, let's have another really explosive move higher. After sort of coming out of that, sort of, I think March sort of 23 sort of period as well. Again, that sort of stock showed relative strength all the way through there, held up pretty well, tightened up, broke a B wave, and had another big move as well. And I think it's even had another big move again since then, Chris, as well. So in October 22, this is one of the stocks that was sort of showing the most amount of strength. CUV was showing strength there, but this is why you sort of got to keep monitoring for strength as well, because sometimes they can weaken off there. So I think by March, this had actually gone to a new low. So by March, this is sort of was showing strength in October, but then by March, it had a really large correction and then sort of tipped over and was not sort of showing strength. Then again, while the rest of the market found a low in October, this was making a new low, so it wasn't showing relative strength as well. So you've got to sort of keep monitoring there. Got to make sure, obviously, that the video there was sort of showing strength early, showed strength late, showed strength again. So just kept showing strength all the way through it. So got to sort of keep monitoring that. I went back to your reports before I sort of headed up to Adelaide, Chris. I thought I'd just go back and look at your 30-30 report. Went back and looked at it. I dug out the week of the low around the 8th of October from memory, and looked at the sort of what stocks were coming out of weekly sort of moves there. And I tried to just look at some bigger names. I think Temple Webster might have been on there, but Stadtfire was sort of one of the bigger names there at the time there. You can see there, again, sort of like it found a low in June, while the rest of the market was going down in October. This had already had a pretty decent rally here, 40 cents up into $1 there, and the whole thing had tightened up here, nice BCP. If we just waited for that B wave break at 85 cents, this rallied, coming out of that October low, this rallied 140%. It's a pretty strong move. We know that this ended up having a three-way pullback and then going again and having a pretty strong move later on as well. The other one which was pretty strong was the neuropharmaceuticals. So again, it was building high, low here. Again, with the rest of the market's going into a low in October, this was showing real relative strength. And this was actually tightening up underneath the high as well at the same time here. So that really showed really strong strength there. So we know this stock here has gone on to like it doubled within 6 months, but I think it's now gone beyond sort of 21, 22. So I had a client of mine who did buy some of these in the 7. So I managed to convince him. Well, I tried to get him to sell half at 14 to get a free carry, but he didn't do that. Thankfully, he didn't listen to his broker. And he managed to sort of sell a third at 21 and get a free carry on the rest. So, but no, it's done pretty well. But again, these are the strongest names here. They were showing relative strength early, kicked on there. So these principles are sort of widely, sort of telling you what stocks the market's sort of buying in the weakness, because really you don't want to be in the sort of strongest names there. So just good signs of looking at. So further down the track there was December, we came back and retested. So we looked at what stocks were showing relative strength in December. We saw here Fisher Paykel had a pretty strong bounce out of October low, really impulsive. Had this pullback into the December low there, but really held up nice and tight there. And obviously managed to sort of, once it broke out of that little tight range, sort of kept going again. So again, showed relative strength out of the October low, showed relative strength in December, kept going higher as well. Webjet, a lot of travel stocks was showing relative strength out of the October low as well. They all had a nice rally, all tightened up here, and then had big gains as well. So again, those stocks were showing relative strength in December. I'm not correcting much. Again, most of that market came out pretty deep in December. You can see these stocks here are holding up nice and tight, just underneath the high there. So that's what we want to see. March 23, we were seeing Ockley sort of tighten up under the high there. This is a really good principle, Chris, because all sounds pretty easy. What I'm sort of selling here so far, what I'm illustrating.
We've got the benefit of hindsight.
Yeah, it's all better in it's not easy in hindsight. But why isn't this easy? And it's not easy because this is what it looks like when, so you basically sort of had your October low, got a nice bounce out of that. We had a nice bounce in December. This made a nice high low. They didn't come back as much, showing better relative strength. But in March, the rest of the market came back pretty deep. Now, Cochlear didn't come back at all. It just stayed. It's really showing showing relative strength versus the rest of the market there. It was really tight price action. So this is up near a high here. So basically asking people to, potentially you might be, only a handful of people might have paid a high price in you to buy for the year. That's why it's hard to buy these sort of new highs. That's why it's not easy, because it's if people sort of don't want to pay that, our psyche is that, we want to pay, all of us want to be buying this October low. Now, we haven't bought it. We didn't buy down here or down here or down here. We definitely don't want to be buying up here. But this relative strength concept tells us that when the market's weak, these stocks are showing real strength, that they can, this is a strong sign. This is what the pros are doing next. They're waiting for these stocks to show their hand, show strength, not pull back and tighten up. And then once they come through, they're breaking up here. This is Cochlear here, 230 here in March. And then we saw this, kick on again, have another retreat, have another big move, another retreat, another big move here. And some big moves in there. And that stock was showing that strength there in March. You're showing very little weakness while the rest of the market's pulling back here. So that's why it's difficult, is that is to sort of get your head around buying those new highs there. But this is what pros are all doing here. I know, O'Neill was certainly buying new highs. David Ryan's buying new highs. Zanger was always buying new highs there. So Quallamaggie is looking for those, most explosive stocks moves, and then wait for a little tight contraction and then pull back there. And then Minervini is looking to sort of buy them after they've had a strong run and had a bit of a pause as well. So all pretty conceptually the same there. Other stock that was pretty strong in October 23 was Dicker Data. This is actually one that I did trade. We did sort of cover this at the time there, because it was sort of showing relative strength versus the rest of the market there. Bit of a funny one because most of the other tech stocks had done pretty well. This had sort of gone down into lows there. So a bit like sort of Woodside at the moment. The sector's been pretty strong, but this stock has been behaving outside of the sector and went to new lows. But eventually it does have a bit of a gain, then tighten up. While the rest of the market was actually really weak in that October 23, this was actually showing some relative strength there. So finally showing some strength, and then it's obviously kicked on from there. I think it's gone another 30% higher up this level then. So that's sort of from looking at those sort of lows in the market, what stocks were showing strength at the time there. What happens when we see a whole sector showing relative strength? And again, that's sort of like around that sort of like Stan Weinstein talks about it. He often mentions that sort of 2-to-1, where it's basically the performance is almost double in a strong sector than what it would be. But I think some of the numbers actually even point to that returns even being more than that, So he talks about, being in the strongest sectors will be, 50 to 75%, but the weakest ones will be lower there. So really, when we see a whole sector light up, that should really catch our attention there. And I know IBD Trade Line now done a bit of homework on this. But they reckon around about 50% of the stock's gains relate to the industry and sector. So so important to be in the right sort of sectors there moving forward there. So that's what I mean. We look at charts and stuff there, but if we're looking at that earnings, hopefully that earnings will alert us to which sectors got the earnings growth going on. But when we see a whole sector light up, they'd show technical strength, so some earnings strength, and then different price strength as well. That should be a really, really strong sign there.
So you've been covering this for many years now. You've been looking at the market leaders, the ones that have had the best quarterly move, the ones that have had the best weekly move. And there are times where you've seen it just glow at you and say, well, hang on a second, the whole sector's lighting up here. There are times where that's happened.
Yeah, it's happened a few times. Obviously with some lithium names, we saw it with some uranium, some gold names, even some sort of tech. Saw some, some of the tech in there. So when we sort of see that on the, particularly the launch pad, which is on the 30/30, when we see maybe sort of 5 to 8 names out of the top 30 that are all in the same sector lighting up, that's always that's a sure sign there. So we can see that I've sort of gone back and looked at your reports there, because I remember at the time there, we were, me personally, I was sort of learning this after following it for a couple of years, seeing some of those sectors in there. So when I sort of, if I see like 5 to 8 names light up in a sector, that's just a sure sign that I should be looking at those really closely there. And I think so in August 23 and again in actually January 24, we saw, I think, sort of 5 to 8 of those uranium names sort of hit the launch pad. So what that means basically, they're the biggest movers for the week, and they were showing relative strength versus the rest of the market there. So August 23, we had uranium names in there. So I had plenty of names in there. What was DPL's in there. Yan Coal, not Yan Coal there, but we just all the
Paladin
uranium names are all in the So Bannerman, BLE was in Paladin, just all BLA. They're all just in the list there, so all just lighting up the list that week. So that was in August. So basically, sort of coming out of that low there. So we can sort of see here, we've been trending up here, showing some relative strength in the market, and then we've gone through a bit of a sideways, sort of again tightening up here, and then we're all breaking out of that congestion there in August. So I mean that sort of sector there. So that tells us that sector is this is the thing about Weinstein sort of saying if you're in the right sector strength, that's when you get the bigger moves there. So all those uranium names were lighting it up in August 23, and we saw we're breaking out of technical patterns, breaking out a little BCPs, pennant flags, whatever you want to call it, B-wave breaks. So I know personally I did trade a lot of these. Didn't trade them into the highs, but they definitely gave some good signals, and I just tried to use my technical theory as to sort of move into the range, into the congestion, and then move out. So I had my technical targets there, so to speak. But they're all lighting up at the same time. We had good volume there, breaking out, good patterns there. And when these had like 62% rallies then 2 months, had another cool off again, had another 39% rally. We know since then, Chris, they've all gone on to go new highs again, so that they've kept, relative strength there. That's the thing, is when these sort of stocks do show relative strength and they break out, we know we've got to be on board there. But then we know those sectors are showing relative strength as well. So we've got to monitor these sectors moving forward as well. So when they go through this cool-ups, these sideways orientations there, because that's impulsive and that's corrective sideways, and then we come out of it again. Just waiting for these little B-wave breaks there. So you have to sort of buy these sectors just because they're in the right sector. You still got to follow your technical patterns. And sometimes some of the names might go a bit down a bit deeper. Just got to wait for the right signals there. But we're definitely seeing 62%, 39%, and I think they're probably up another 40, 50% here now, even higher. So they've remained pretty strong there. So that was BOE, Bannerman there. Geez, 82% rally out of the first move, Chris. And another 42% rally. And I think we're at near highs here, probably another 40, 50% higher again. So a lot of people say, oh, we don't get the sort of same moves that we get in States. And we don't get these sort of stocks going 100%, but there's still plenty of, if you look at the relative strength concept, we're still getting some big names there, and some big moves, and we're getting some big sector moves as well there. I mean, that's a pretty big moves in those sort of uranium stocks there. Not just one, they're all the whole lot there. So Paladin, which is probably the leader, which often sort of these are probably the safest place there, but they probably don't move most there, still had a 43% rally, tightened up again. You waited for the B-wave break, you got another 45% rally again, pull back again, had another B-wave break, another 25%, and then since then it's gone even higher again. So you probably get another 25, 30% again. So they've kept setting up. At some stage they're getting a bit long on the tooth and they'll fail there, but these stocks that do break out, show the relative strength, when the whole sector lights up together, we know that's very meaningful. That's everything we know about technicals and relative strength, and history tells us we're shipping toward those. So that was sort of uranium there. We saw something similar there with gold there. October 22 and December 23, we saw gold showing relative strength versus the overall market there. So pretty interesting there, because October 22 is the low, Chris. So gold was actually showing relative strength out of the market low there. So October 22, while the rest of the market's finding new lows, this was basically, it already rallied out of the low, and we're showing relative strength. Was in a little tight pattern, and then obviously it went to go higher. Obviously had a pullback, had another rally. Let's pull back, have another rally. We're just waiting for those little B-wave breaks there. There's plenty of moves there. There's 21%, 28%, 36%. I think they've gone even higher again. So still some reasonably sized moves there. Just waiting for those technical moves there. Waiting for the stock to show relative strength there. Evolution showed relative strength again in that, coming out of the October low in December. Went higher, had a few pretty good moves in there. There's some like 35% moves, some 39% moves there. RMS, I think it rallied 17% out of that December low. 56%, 38%, 47%. But if there's multiple here within 12 to 18 months there, it's again showing relative strength the whole time sector there. So just some big moves there. I think what Perseus there moved 43%, had another 32%. So this one here, you can sort of see, had that relative strength in October, really tight play there. So that was a pretty good sign there. Had a pretty big move up there. Been a bit choppy since then, but you got to wait for the right setup here, because I think in December, we're talking about most of the gold stocks there in December were all breaking up, setting up. This one wasn't. This one basically was making lower high, lower high. This is why you can't just buy any stock any time. You've got to wait for those sort of, you got to get the sector warming up. You got to get the relative strength there, but then you've also got to wait for the right technical indicator as well. You've really got to wait for that sort of, what I consider that sort of little breaking above a high there. So you would have had, potentially you could have traded a few others, could have scaled out, could have come into this one late. So, it's why it's just important to have that, look at the strongest names, look at, obviously the strongest performance sectors there, but have some basis around, have some process around your entries and stuff there.
Well, there might not be questions. I'd like to extend on just what you were saying there. You can't just buy, if it's in the right sector and the sector's leading, you can't just buy the stock, because PRU on the chart that you just had was making consecutive lower highs. I know that the studies that we've done on the stocks and themes that we've analysed together, we look back at Liontown Resources in May 2020. We've done a whole video on this, is that the lithium companies broke out, and they broke out of VCPs, and there were more than a dozen on the ASX that all broke out of VCPs. But that was over the span of more than 3 months between the first one breaking out of the B waves that you're talking about and actually the last one in August. So
I think you had like 6 or 8 first week, then there might have been another 4 names or new names the next week, and another 4 or 5 the third week. So the whole sector was just lighting up, 3 weeks in a row. So I was like, wow, okay, this meaningful. So all those stocks are showing strength there, back to back to back. I guess that, yeah.
Well, timing that, do you feel that you have to identify it immediately, as in the first observation, or do you feel that you've actually got a bit of time to analyse, and this could be a week or 2 or maybe more when you can position yourself and get the right feel for it?
Well, me personally, I've always felt like I needed to sort of try and jag those lows. I'll get in there early there, but all those professionals there, so Minervini, Ryan, and the other stuff there, they're not. They are often, Minervini is often not entering the market until like a month after the market's bounced. So he's not picking the lows and stuff in there as well. So he's often waiting for those strongest names, obviously that, they probably bounce up to the high. So because he's sort of sitting and just watching, looking for the strongest names that bounce, and they congest, he's looking for a little tightening pattern and then entry there. So he's looking for those explosive moves and bang. So what that means for him is that with his patience there and hasn't rushed into just buying anything, he's waited for the market to show its hand, stronger name, show the strength, have the little pause, the little tightening, little coil, a little breather, and then coming in there. And that, because he hasn't sort of traded anything, he's not sort of stuck in. Yeah, he's only identifying the strongest stocks, ones that have called up, tightened up, and then bang, and then, if the explosive move, and then he looks for the next set that's setting up. Okay, so he's noticing that, lithium or gold or uranium or whatever it is, tech stocks are all showing strength. So they're the ones that are working. So after he makes the big gains out of the pop, he filters through to the next sort of stocks as well there. So they are sitting out there. They really have strong sit-out power, Chris, often out of the market when the market's at its worst. That's having some rules about not being in the market when the market breaks down below certain moving averages. Now they're looking to only come back in the market after it's sort of shown its hand there. I know, like O'Neill wouldn't come back in the market until you saw a follow-through day. And we know follow-through day is probably day 4 to day 7 after a low. So he's not trying to buy the low, so don't try and buy the low there. Just wait for that sort of follow-through day. There's a discipline in actually waiting for it. But Minervini, it can be a month later after the low there. And the market's already bounced 10%. You think, he's missed it. But what he's doing is actually looking at strongest names, looking for the cool up there, the pause, and then he's basically coming into the strongest names that are ready to go again. And then you're getting bang and then explosive move, and then that's why they're so they're not, you're not sort of toiling away where let's you talk about sort of while you're sort of sitting out there, sort of everyone else is doing the groundwork, but you're also laying the path for your success for the future there. So, but all these guys have really good, sit-out power. They're just not involved in bear markets there. Now, they might do a little bit of shorting there, but they're not shorters. But most of them aren't shorters there. Or only have a really small position on the short side there. They're just waiting for these high momentum stocks to show strength there and come and trade them there. So it's, take minimal risk, try and capture the big gains. Maximize compounding, because there's sort of like, most people who are sort of trading and stuff there, they might, say they got account size, just say it's 150 grand. They just say that betting, say 10%, say, 15 grand, a lot size or something like that. They bet that same size over the year. What these guys do is that account grows to say 160, and the next month it'll be 16 grand bet size. Then it goes to say 200, it'll be 200. So they're really compounding the returns. As the account keeps growing, their bet size keeps increasing as well. So they're really compounding their returns there. So that's sort of why they go from, being from 250 to, I think, sort of around 3 or 5% return in a year there. So, yeah.
But they're definitely huge returners. You mentioned right at the start that Minervini has a quote about not necessarily time in the market, it's having the right time and being invested for the least amount of time.
Yeah.
You're talking about the market lows and O'Neill followed through. So he might be in day 4 to day 7 after the low. You're saying Minervini could be a month. How do you personally deal with kind of the anxiety that can build up that the market is getting away? If you're sitting on your hands for one whole month, everyone's talking about these phenomenal trades that getting bounces off the lows, really fast rallies. How do you sit with that and wait?
Yeah. It's actually been happening to me the last week here because I sort of had my watch list over the last week or two, and I've had a watch list of sort of BCPs, maybe sort of 0, 1, 2, 3s, just sort of certain setups that I look for. And some of the trades that I've taken, they've been moving higher, moving slowly. And then some of the ones on my list that I didn't take, they've been exploding. And that's just trading. That's what happens there. But you can get FOMO and stuff there, but all we can do is just okay, well, at least I'm identifying those moves. They're part of the process there. Obviously analyze why didn't I take these other names? Were they sectors that weren't as strong, or am I taking not the sectors that, am I taking the 2 charts, missing the sectors? So I'll go back at the end of this month, I'll go back and review my trades and work out why I ended up in the slow moving trains rather than the fast moving trains. But it changes. I mean, 3 weeks ago I had, one of the best weeks of the year, big move, and then the next couple of weeks it's congesting and hard work. So, but you just got to keep reviewing, keep getting better. Just got to, I think the style drift is really important as well. That's the one thing that, if you listen to Chat with Traders or any trading podcast about the best, or if you listen to the best traders there, it's narrow. The focus, the style is narrow. They're really becoming a master of certain elements there. And then once you start trading that sort of one setup there, you start to, really see it, what it is, and you can break it down, fine tune it. And then, because you're not looking at 20, 30, 100 stocks there, you might be looking at a smaller bracket there, you can really sort of fine tune there. And then I find I'm sort of building a library of those setups too, Chris, as well. So you can sort of try and see for you, if there's a few different type of, setups there, you can go back and think, okay, why didn't I trade that one? And I saw this and it sort of threw me. So next time, okay, don't let this throw you. And then, keep a library there. So you can go back and analyze as well. So the best traders are keeping a library of these setups. They're going bar by bar. Some of the strong, like one thing, I know Oliver Kelly's probably got one of the best records there in the last few years. He would go back and look at the strongest stocks, look at them bar by bar, just analyze them bar by bar, just to sort of see what they did after each bar, and just train the eye to learn that way as well. So then you get, behavioral finances we have, with we have a lot of biases there, and ones with hindsight, you go, oh yeah, I would have. We all overestimate abilities. So we always see in hindsight. That's why it's sort of better to sort of train yourself at the time there and sort of see it, and then keep a record as well, because we do have biases. We do overestimate our ability as well. And but if you get a library of all those setups there, you just train that one setup, you can really sort of hone yourself there. To become a sort of master, So trying to think what the
While you think of that quote, we're definitely benefiting of your library that you've been putting together, because that's a part of this presentation and all those charts that you've looked at and the research you've looked back over the sectors. So we want to thank you for that. And is there a quote that came to you?
No, I always talk about sort of like, settle on a style, follow your rules and become its master. And that's sort of something I wrote pretty early there. And I think I wrote that down early without really thinking about what that really meant. And it's only really in the last sort of 6 months here that I'm actually really starting to understand that a lot. And it's just having that ability to really narrow. And like I just, I brought my my 10 patterns into around 4 or 5, and my performance doubled, Chris, by doing that. And that should have told me something at the time. Should have told me to keep going, So I think I've got to get it down to say 2 or 3, and maybe my performance can double again. So I in the last few months, I've definitely narrowed. So getting narrower and narrower, and I just all the data's telling me that. All the greats tell you that. All the best traders tell you that. I mean, it's listen to podcasts and stuff. It's just gonna narrow your focus there. Become a master of something tighter there. Just don't have the style drift. Just narrow, and then have your process there, and just be someone who follows their rules 100% of the time, and just tweaks them a little bit to make them slightly better over time. There by just analysing going over your trading process, making sure that you're doing all the things you should be doing, and just hopefully improving stuff. Because we can't just sort of, like, none of these traders are perfect for us as well, but they are. Every month or every second month, they're analysing their trading. They're looking at what they did right and wrong, and they're still tweaking. Even though these guys are making billions of bucks, are making 100, 200, 300%, they're not just making 200, 300%. Hey, I've worked it out. Thanks, sit back. Go. They're continually working on it, working on their craft, improving, analysing their trades non-stop. So that's what we got to do.
Well, that is what we've got to do, and that's a lesson we'll take from this, and we'll say thank you very much for sharing this presentation that you piled together of the best for our benefit. So thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Echoing on your thoughts of focusing and specialising in narrowing our focus to the top momentum companies. There's a whole playlist of what you talk about, what Gary talks about on Fridays with those top momentum companies that he's taking screenshots of in this report. He's also got his Tuesday report where he shares his own portfolio and what he's doing with clients. And over there on the left, we've got Gary's X or his Twitter handle if you want to follow Gary over there.